everyone. Thanks so much for joining us on another edition of Royal LePage Binder Live. My name is Arms Bumanlag. Very happy to be here with you. And this is a special edition of what we do here on a monthly basis and diving into the numbers and making sense of some of the statistics coming out of the Windsor Essex County real estate market. As always, I'm joined by my friend and our broker and owner, Mr. Frank Binder. It's always a pleasure to see you, my friend, and happy holidays to you.
Thank you. It's wonderful to be with you.
Frank, there's so much to unpack today, and I know we're going to be doing something relatively new that I'm excited to talk about, and I think it'll shed some light on some of the numbers coming out too. But we always want to talk about some of the numbers that have come out month in and month out, and we're taking a look at the, I guess, wider snapshot for what's happening in the Windsor Essex County real estate market. And there's a lot to talk about in terms of some of the numbers that have come out for the month of November.
Absolutely. It always changes every month. So little things that we want to pick up on, and that's exactly what we're talking about. We're talking about we'll be talking about listings and sales. Both those markets went up. You've got the average, the monthly average there, where I think it's already been reported at 570. The annualized average is a little bit less than that, but it's showing greater strength. A lot of stuff, and we'll dive into these numbers very shortly as to what we want to talk about in each one of those areas. Okay.
Yeah, the units sold by price is always something that's interesting too. I mean, the average sales price, it looks from 2020 to 2021 here, 570,879. That's pretty big jump over 2020.
Yeah, I think the annualized rate though is it's about 555 if we talk about it. So the annualized, the average sale price is certainly for the month. I never like to go to that because the annualized rate is probably a better rate to really do a comparative to, and that's about 555. Only went up ever so slightly from 548 last month. So there's a slight increase. That's only because of that November was an increase both in listings and in sales. And if you see the 12% up on the sold side, and you see the 35% up on the listing side, I mean, those are two numbers that were a bit unexpected. We can talk about why the numbers at 626 and as far as residential sales is at where they are. But that really, I think, may be due to the interest rate suggestion. The interest rates are going to increase. So what happens automatically is that people start moving into the housing market to jump ahead of that, make sure that they can secure a good interest rate. And so that's the kind of stuff that happens sometimes. So usually November is a little bit of a slower month. It slows down going into Christmas season. And what we found out is that it was a really a robust month where we had some increases in both listings, which is really quite different, because usually, again, as we come into the Christmas season, we don't see people trying to sell their houses and try to put them on the market right now. And yet November was a substantial increase in listings. I mean, that's probably the bigger story to talk about, where 35% of the people put up their houses for sale in November. And that's a bit of an oddity, and not entirely sure why that's going on, but it's a good thing for the market. It's bringing more balance to the market, providing a supply. Unlike other regions of Ontario, which are really lacking in supply, they're still finding supply being a challenge. And we've not seen that here in Windsor. We've seen the supply side being more of a balanced type of situation, even through the last 3 months. But to see this 35% spike is a bit of an oddity for November. So that's one of the odd numbers that came out of the stats for us to look at.
Yeah, that's I mean, I know there's not one particular reason, Frank, for that, but you said a lot of folks maybe trying to get ahead of that expected interest rate increase, get their houses on the market too, and I guess that good supply, like you said, has slowed any sort of price increase.
Yeah, and that's when we get balance, right? So listen. Last month we were showing a negative 12% in drops of units sold. This month is the opposite; it's 12% up. So I mean, you've got complete reversal there, and you've also had an increase in the listings going onto the market. And so what we've had is an abundance of properties for people to see and for buying. But we're seeing much more of a balanced approach to the whole market. It's still very robust. What we've seen is maybe a lesser multiple offers because of that, because I have more things to pick from. And so the bottom line is, what tends to happen is that average days on market increases somewhat a little bit, because it takes a little longer for people to come through and see these houses, because when I'm choosing to look at 4 and 5 houses as opposed to 2 that would have been available to me before, it's going to take me longer to do that, right? That's just as simple as that. So that's really what is happening to our market, but it's really a good balanced market, and we've seen the average sale price move up, because of it. The effect of that average sale price on the total for the year isn't significant. I got to again remind you that that's a monthly number that's there, not an annualized number. I really prefer to go to the annualized number, which is 555,000. So that's the effect that you have on the annual average. But you're right. The monthly average went up again. I mean, all these things are all up. So, I mean, we have nothing to complain about. These are all numbers that are going up. Not everybody wants to see those numbers go up either. But the bottom line is that it has gone up in our area for at least for the month of November.
And I think too, Frank, it's
we'll see a softening of that.
Yeah, and it allows, I think, Frank, folks who are trying to get into the market or to find that, like you said, that selection is key, right? Where they're able to see a little bit more, they're allowed to kind of maybe open up their minds a little bit more, as opposed to what we saw versus, say, in the summertime or even the spring this year, where there was a lot of decisions made very quickly about, hey, do you want to act on this, and can we make a competitive offer?
Yeah, we've had some young buyers who have abandoned the market. I mean, they really truly have, because what was happening was, if you're not getting supply and you're constantly getting battered by multiple offers and multiple offers and you get tired of it after a while, and you basically abandon the market. But the fact of the matter is, in our particular, there's a little bit less of that, because if we're getting increased listings, which we've only had single digit increases. Now suddenly we have this double digit increase. That just indicates that there's more supply going on the market that I can pick from. So those folks who left that market may want to re-enter the market now and start looking, because I've got choices. I can make choices now, and I've got some choices, and hopefully that will help them select a house. Now, there's always the affordability issue. Whether can I afford it or can I afford it? That's always going to be an issue. But the fact of the matter is, some of these folks could not even find one to look at, right? And the key for us is that we now have a good abundance of supply. We don't really see that. I can't tell you, I've talked to many brokers in the other parts of Ontario. That's not what they're seeing. They're seeing greater demand and less supply. And the supply continues to be a negative, right? Not a positive. We're one of the few places, especially to that extent, where it's 35%. I mean, I don't think we've seen that this year yet. So it's great to see it. Good for the consumer. Absolutely.
Frank, one of the things that we wanted to do on this monthly update is to take a look at not only the numbers month to month and what those means and some of the trends, but we also wanted to take a look at what's happening per quarter, right? And dive into some of those numbers and then break it down, which I think is going to be really interesting for our viewers too, to break it down from a residential house perspective and then a condominium perspective too. And I know we've got a lot of talk about this too, to kind of take a look at this, but the average amount of time on the market for residential homes. This is something that we wanted to touch base on, because there's some interesting information on this particular graph that our listeners and our viewers can certainly, take a look at to see where we've been over the last little bit.
Exactly, and you know what? The interesting things is that on the average days in market, you're going to see that there's a difference in the trending. When we look at the median average. It's a bit of a different, but you can see the spikes in the green line. So basically what we want to do is, I should start with this, and that is that we're not going to spend time on this graph every month. We're going to talk about it as a trend. So the trend, generally we're going to review this every 3 months on a quarterly basis to try to give you a sense of the trends. But you'll notice that at the very beginning, we start at 25 days of the market. Notice a big drop. Drops well below 20, and then it even drops down. And it's kind of interesting. So if you look at the dates there, when you drop from 25, you drop to below 15, drops to a low of about 12 days on the market. And you see that right through April, May, right into June. It's roughly running about 12 days in the market, maybe 13 days in the market. Then you see in the summer, as it kind of goes up, what does that mean? It just means that houses are sitting on the market a bit longer. It goes all the way up into September, and then the fall market, where people enter the market again, it starts decreasing again. So the market, what happens is it shows the demand numbers and how it affects the market. And usually we have a big spring market. We have a lot of buyers entering the market at that time. And we also have sellers entering the market, much more interactive. So you suddenly see where it sits from 25, which would have been at the very beginning of the year, where very little things are happening in December, from December 15th to January 15th. You see very little stuff happening because of the Christmas season. And then all of a sudden it just pops down to your spring market. You see a bit of an increase in the summer market when some people are not looking for houses as much. And then you see the fall market again, the number starts to dip again. But we've been running well below 20 days on the market for most properties. And so that's one of the things we talk about. We talk about listing strategies. Why do we do this? We put listing strategies. You're seeing a lot of realtors using this strategy of, I'm going to take offers 5 days out or 7 days out. And that's a listing strategy. So it kind of leads into the next slide we're going to talk about, where we're going to look at the slides where what's the list price compared to what they got. And that's what we're talking about here. So you see the green is what I asked for, and the blue is what I got. And you see the blue is always more than the green all the way through it, throughout the entire year. But what you see is that there's some situations, like in August, and in October again, where they didn't get as many over the list price because that green graph is closer to the top. And so you're going to see some months where that happens. And that's really it's indicative of what's happening in the marketplace in terms of whether they're getting the properties over the list price. And what we've seen this year is a lot of people have had to abandon those strategies from time to time and go back to what we call listing at the market value. And very often, if you see a listing that's out 7 days or 8 days or 10 days, sometimes it doesn't sell. It doesn't sell at that using that strategy, and you have to re-strategize it. And what you're seeing is more and more of these properties being put back on the market at what they call a market price. And actually, you should be looking for that in your residential listing to see if there's any indication that they're having a market price. If you see nothing that they're going to be taking offers in 5 to 7 days, that is absolutely what that means. It means that the price that on that house is basically the market value for the house, and you should be keeping that in mind when you're looking at it. And so it's really important for consumers, buyers, to know what the differences are when they're out there looking.
Yeah, and I think that's some great insight too. I mean, to even see if again, if that house gets relisted at like you had said, Frank, would that be detrimental to the seller, or would that be an advantage for the buyer themselves?
No, it's not detrimental to the seller. The seller's going to get their market value anyways out of the house.
Mhm.
It's just a matter of strategy. So what happens is that very often when obviously a listing agent is using a seller's strategy, is to get as many buyers buying my house at the same time, and kind of like getting a competition between the buyers. That's really what it's done. That's why that strategy is put in place. What we're finding sometimes is that is not happening. So and why isn't it happening? It's happening for the very reason when we started this conversation, is that if I've got more buyers out there looking and they've got more to pick from, it's going to take them more than 7 days to figure it out. Okay, if I start looking, I'm looking for weeks. I could be looking for weeks. Well, if I have a 7-day strategy, my house may not get all those buyers ready to buy my house within the 7 days. The buyers are still there, still willing to buy. It just doesn't happen in the 7 days. So we have to change the strategy. We have to go back to putting it at a value that is market, and that you're seeing a lot of that kind of stuff happen these days. And that doesn't bode poorly for the seller. Almost always the seller is still selling it for over the list price, likely, and they're getting very close to the list price. And basically, you might have only 2 buyers as opposed to 5 or 10. The strategy is always to develop many more buyers. But remember what the strategy is. I drop my asking price to below the market to get it above the market. And so that is something that you have to keep in mind. And that can change, certainly changes the stats and the graphs, of course, a bit, but understand that that's happening in our business. And the buyer has to get used to that. That's kind of it. Actually, we've had to get used to it because sometimes the strategies aren't working. The strategies don't work when you see a 25 days on the market. So that's why we introduced that graph. If I've got average days on the market, it's 25 days. Okay, if I'm talking to a salesperson in my office, if that area is taking 20 days to sell a house, don't employ the strategy. Right? Don't employ the listing strategy of 7 days out. The likelihood of you getting an offer in 7 days when it's taking 20 days in that particular location, if it's whatever part of Windsor where that happens, is that's really going to indicate whether you're going to get an offer within 7 days or not. If it takes 15 days or 20 days to sell houses in this neighborhood, it's likely going to take 15 to 20 days for you to sell that house in that neighborhood. Should you employ that strategy is the question. And sometimes when you try to employ this strategy and it doesn't work, I just quickly look at, well, what was the average days in market? Well, the average days in market was 20 days. Well, I shouldn't employ that strategy. It's going to take me a little longer to sell the house in there. That doesn't mean I'm not going to sell my house. It's just going to take me longer. That's really all that means. Okay, at the end of the day. So, I mean, that's kind of things that we have to keep in mind when we're dealing with our realtor and talking to our realtor to get that proper advice.
Frank, can we take a look too at the sales price trend, and
Yep.
certainly from a residential perspective too? I mean, speaking of, look at that upward climb, so to speak. My gosh, holy
Yeah,
cow!
and I have to remind you that this is a 10-year thing. Okay, so we're not talking about a month thing here. I just want to remind everybody this is
Yeah.
not what happened this year, but look at the 10-year average where we were way back in 2011. Again, remind you, if you remember, 2011 was really at the very end of our big problems from 2008 on forward, and we're just starting coming out of that recessionary period, if you want to call it that. And then what you see is that you see it for the next 3 years, basically just hovering around there, and then we start making the climb up because the economics of the country and everything else was moving along much better. But look at the climb in the last little while. I mean, so if you look at from 2018 on, it's just climbed up. And this is what we've experienced in our neighborhood, and that's what's taking the breath away of so many people, going, wait a minute, we've got to that unaffordable level, and you could just see that right there in the graph, and that it's what's happened. But I've got to remind people, and I constantly want to remind you that, listen, even at 555,000, we're still under the country's average, right? So I think what we have to keep in mind is that for a large city, it's still somewhat affordable in our neighborhoods, and that's the thing. But there's no question of the increase in price. It's very dramatic, and you can see it obviously in this graph here, where it's illustrating the trends for the last 10 years. And I think that's a graph we wanted to show the public, and we wanted people to see it, whether you like it or whether you don't. You notice that we peaked there, though. Remember, see the peak there sometime in 2021. We peaked. We actually dropped a little bit and then went back up. So that's really important for us to keep those things in mind. That there was a bit of peak. So we've kind of plateaued over the last little while in terms of our sales price, because and we expect that will likely continue for some time after the pandemic. So we've got. We have these are anomalies that we haven't seen because we didn't know what we'd be faced with in the pandemic, and yet the pandemic just increased the prices. So that was a bit of we would have thought the opposite. That is not the case. That just tells you that buyer demand is that strong.
Frank, just to circle back on what you had said about comparing our region with the $500,000 mark versus other places, right? In terms
Right.
of the affordability index across Canada. I was outside the other day taking out the garbage, and I ran into some neighbors, and we live in Amherstburg, and they're new, and they came down here from Hamilton,
Yep.
and they've recently bought, and they're a young couple, and they, quite honestly, in our new subdivision, Frank, the prices have gone up, but they didn't balk at the price that they had paid.
Yeah.
at all. They said, comparatively speaking to what they were paying for a side by side in Hamilton,
Yeah.
they're doing a lot of the remote work, and they're down here in Windsor now.
Yeah, and that's the thing. I mean, we're sitting in Windsor. We don't see all those prices in other neighborhoods, but I mean, you're talking about 686,000 in Canada as being the average price across the country. If you go to Toronto, it's 700 and some odd thousand. I don't know the exact number, but you're well into the 700s. Hamilton is pretty close to Toronto, so the closer you get to Toronto, that epicenter, your prices have gone up. And I know even like in Kitchener, Waterloo, their price average is now well over 700. And we call that the Toronto effect. You've got that kind of market. But if anybody coming from that region of the country, anywhere outside, an hour outside of Toronto, for example, they'll come here and they'll think this is a great buy. And we still have people coming down the road. I mean, I can't tell you how many Torontonians or how many Toronto agents have sold houses in here in the last little. They're coming in droves here. That's part of why that price has been pushed up, actually. Because I mean, I look at a $500,000 buy, and what I'm buying for 500,000 would cost me over $1 million there. So they look at that and go, well, what's $50,000 more to me, right, to get that house here? Because I just sold one for a higher price, anyways, and that's really what it is. So that, in fact, has affected our area. We don't want to say that too much, but it has affected the area. We're often competing with Toronto buyers, and they've got more money to spend than we're willing to spend. So that's really that's part of the trend that we've been facing over the last little while. I have never seen as many transactions from outside our board. And what I mean by that is that those are outside buyers coming into our board, represented by outside members of other boards, and that's generally Toronto, coming down here buying houses. We've had a lot of transactions. And we don't speak about that a lot, but there's a lot of transactions that have occurred with those particular buyers here, both in the residential market and even in the investment market, substantially in the investment market. So even that market's been affected by those external buyers coming into it. Now, when I say external, I'm talking domestic. I'm talking within our province, right? I'm not talking about foreign buyers in that sense of the word. But that has affected our market, no question about it, unequivocal.
Just before we get to our next topic here in condos here in Windsor Essex, just want to give a shout out to Pat, who says, great interview, Arms and Frank. Pat, thank you so much for joining the live stream. We appreciate the kind words too. So
he's my buddy. Thanks, Pat.
That's always good to see folks chime in and
Yeah.
watch and learn a little bit more. And that's why I love doing these with you, Frank, because I get to learn a lot as well and tap into your keen knowledge and insight. Condos, average day on market for condos. This is something I know over the last couple months, certainly last year, we've been working together. We've been talking about the increase of condos, and this is a graph that I think we need to show too. And I know we wanted to show in terms of what this looks like, and days on market here as well.
And this is the interesting thing too. Look at this. When we started this in January, look at the average days. It actually increases during the winter months, right up to almost 60 days. That's 2 months. We don't see houses lasting anywhere close to that in our graph systems here. But now we're talking. We started at 50, but guess where we end up? We're now. This kind of shows you how the condominium market has responded to the pressures of the buyers in this year. We've had a lot of people move to condominiums. All right. I can't find the house. I go and buy a condominium. This is what's happening. You both have that in the retirement area, and you also see it in the new home buyer area. So what happened was that the condominium became a choice, right? A choice for buyers, and it started back in March and April. And look at the dive that you see in the month of 2 months there. In the spring market, where did they go? They went to condominiums for sure. It dropped all the way down to below 20 days in the market, shuffled back up during the summer where it's kind of slowing down. And again, it drops back down to below the 20 day time. And now it's just gradually going up. But we wanted to show this because a lot of people went to condominiums during the course of this year and bought them. And that's what it is. And so you're not even seeing them on the market for any length of time. Or any length of time. I mean, look at the beginning of the year, what the length of time it was, and that has been a dramatic effect on the condominium. We also will see that in the next slide when we go into how much money they got in terms of what their listing to sales ratios were.
Frank, I wanted to ask you too. Just I do a lot of driving for what I do, and I do see a lot of condos going up, and in the region, there's a lot of these different types of condominiums that are popping up. Do you think that is somewhat indicative of the people getting pushed into not getting pushed into, but certainly looking at condos and it's like, hey, wait a second, this is actually something I can get into. This is something that
Yeah.
if you're a retiree, I know my parents were looking at one recently too. Something that they're looking to expand here in the region over the next little bit.
Listen, that's really a choice, right? So, they're not being pushed, but it's a choice. So I can choose to live in it. It's a bit of a different lifestyle for me to live in it. And the bottom line is, it wasn't as popular. It's suddenly becoming popular. Why? When you have price extremities, like you've had this in Toronto for over 10 years. And I mean, most people who can't enter the market in Toronto, that's been established well over 10 years. What I could do if I wanted to live in Toronto is I could buy a condominium. And even the condominiums now, and the average price in a condominium in Toronto, I'm talking condo apartment, 800 square feet, you're talking $600,000 and up. So the bottom line, that's the entry level for that in Toronto. Here, we can get into those condos for the high threes and low fours, right? So it's still an appropriate place. I mean, listen, when I was a young man, my options were to rent an apartment, for goodness sakes. That's where you normally start. So maybe, I don't know. I hate to use the word that we had the opportunity to buy houses, but we did. A lot of people in Windsor bought houses. But the reality of many people in many cities was I had to buy a condominium. I had to start there. And that's what we're getting now. We're at the price levels now. That's forcing us into the condo market. And yes, so what happens is we're getting a lot of those being built now because they've got pricing that is where they can make money. The developer can make money on it. But really key to that is also that they can rent it. So I'm taking less of a risk if I can rent it at a reasonable price if I don't sell it. And so that opportunity is there for the developer. And it's now an opportunity for those who can't afford to buy a house, at least to get into a condominium, something that they can own. And that's really a good thing. We've got a lot of projects, quite frankly, that are already pre-sold, 100% sold, and not even built yet. So, I mean, that's what happens in Toronto. It happens in Toronto on a regular basis. And now we're starting to see that happen here, which we haven't seen for years. And I'm sure my friend Pat Agnew could tell you the same thing because we've been around for a while. We've just not seen it. We've not seen high-rise condos going up in any way, and yet you've got them all over the place, and they're springing up, and they're basically all the reservations are 100% there, and they're being built with people that are ready to move in, right? So, and that's a good thing. I'm glad to see that happening because that's a big part of our market that we've got to be able to offer for those who just need housing and want to own something. So, there's nothing wrong with owning a condo and starting there. That's fine.
Yeah, and that's that listing versus sale price too for condominiums. I mean, this graph really tells a story as well, Frank.
Exactly. So you'll see in this graph, unlike the residential graph, that some of the times the green and the green and the blue graph are almost identical, right? So I didn't sell it over list, but look at what's happened towards the end of the year. Now you've got much more of that being the case, and they're almost always selling over lists. So even in this area, this listing strategy is sometimes being employed, but they're getting their price, right? So that's a nice thing to see that the condo owners are getting their prices, and it's working out really, really well for both the buyer and the seller at the same time. But you'll notice that they look at the sales price; they're reaching $350,000, and this is resale stuff. Okay, so new stuff is a little bit higher price than that, but you're getting condominiums selling at close to the $350,000 mark in quite a few of the months that we've got showing here.
Well, Frank, finally here on the stream, and thank you so much. I mean, we should note that we're going to be doing that on a monthly, quarterly basis when we deep
Yeah.
dive into those particular graphs, especially heading into 2022. But what advice do you have for folks in the market looking to maybe list their home, or using one of our agents to sort of make their next move heading into the next couple of weeks or even the winter months in 2022?
Why we're presenting the average days of market is something that you always want to look at. When you're talking to a realtor who's going to list your house, they ought to know how much time it's going to take. They should be able to point out to you that likely this is going to take you the next 30 days or the next 20 days for this to happen. And so you always want to review the average days of market with your seller, get them used to what to expect. So the expectations of the seller, in order for us to appropriate, and I'm talking to all realtors now, just not only in my group, is really to be able to share that information. They do have it at their fingertips, just like I showed it to you. They do have that. They also have that for their own particular neighborhoods. So that's really, really important. So that piece of information needs to be shared with the seller, and the seller needs to know it just to get a good understanding of what they should expect. And that really plays into the price. So what can I expect in that time frame? Well, your average days on market is going to tell you how quickly you're going to be able to sell it, and basically your CMA, or your comp, they call it the comps in our business. So your comps are going to tell you what you're going to be able to get, and that's what buyers have been buying it in the last little while. I would also tell you, as a listing, from a listing standpoint, don't take 6 months out. Go back only a couple months. Get as many sales in the last months, because that sometimes there can be quite a bit of a difference in the price range, as you saw in our graphs, of what things are selling for from August right to December, or 6 months before. And that's something that you have to keep in mind, right? So you've really got to be in the short term, get as much information about the short term market that you can garner from your realtor as the list when you're considering selling your house. That's
Awesome
really
stuff.
very important. Okay.
Well, thank you so much for your time. I know how busy you guys are, and and thank you for everything that you've done for the community. I know there's a lot of charitable things that Royal LePage has sort of kicked off over the last little bit, from Toys for Tots in Amherstburg and Leamington to the Humane Society Drive to,
Yeah.
reaching out to the Hiatus House too. I mean, it's great to see not only Frank, the team buying and selling Windsor Essex, but also investing in our communities here locally.
We're big believers in it. We're having fun doing it, actually, a lot of fun doing it. So, we love the fact that we can give back, and that's exactly what we want to do. Okay. So, and I know you do this as well, and we appreciate all your efforts on our behalf there, Amherst.
Oh, well, you're an very easy and very great guy to work for, if the folks haven't told you yet. It's a
Thank
pleasure to learn and to learn from the best, and certainly appreciate your time and everything that you do for everybody in the brokerage across all of the locations here in Windsor, Essex. And just before I let you go, Frank, we've got our buddy Mike saying, Mike Coffin, good and timely updates. Appreciate it. And Stephen White, thanks, Frank. Thanks, Arms. Great conversation. So
Thanks.
appreciate that.
We appreciate it, and we want to just wish everybody the happiest of holidays. Enjoy it. Try to get together with your family. We've got opportunities to do that now, and hopefully that all goes well for everybody. Enjoy the holidays. It's a special time with family. So I want to wish everybody happiest of holidays. We won't see you to the beginning of next year. So until that time, enjoy the holidays. Okay.
You too, Frank. Thank you so much, and I appreciate the time, sir.
Yeah. Take
Thank
care.
you very much. Frank Binder, our owner and broker of record, great guy, tons of knowledge, right? Things that when you are working with realtor, like Frank said, you should have that information at your fingertips. You should have those strategies in place, like Frank said, and it's great to take a look at those numbers and really understand where we're coming from, especially in the market situation that we continue to see here in the Windsor Essex County area. So don't forget, we've got you covered with agents right across Windsor and Essex County, with locations right across the region, royallepagebinder.com. And you can follow us on social media as well for complete updates. So we'll be back next month with more and Frank, and more insight on this month in real estate in YQG. Thanks for watching the latest edition of Royal LePage Binder Live. We appreciate the time. And yes, as Stephen White would say, cheers to you. And don't forget to subscribe to our YouTube page for the latest updates too, and more on our agents right across Windsor and Essex County. Thanks for watching.